Good morning, guys. Can you hear me well? Can you see my screen? We had a technical issue with OBS, but now everything looks that it works just fine. So apologies for that. We had to make this stream schedule twice. Okay, great. Alrighty, so let's dive into the markets. Which one is the correct? It's this one here. So let's start with the gold today. As you guys see, yesterday the price stopped at this support line we marked. Now again, you have to understand at least that this support can hold the prices. We said there is a kind of double support here because of this upward tentative trend line, also because of this horizontal support, and the price found some base, therefore it may be going to bounce to the upside. We will see for how this support is going to hold. So far we don't have any price action reversal at support. Price didn't make any higher high or higher low. It's still making lower highs and lower lows, something that traders, they don't pay attention to. They just see the large swings, but that's not the case. We have to also monitor price action by price action. Okay. So from this point onwards, I do expect the price to continue moving higher unless price penetrates this area of support. For now, I'm on the sidelines on this time frame, but if you're trading, let's say the 15-minute chart, let's check the 15-minute chart. Price makes higher highs and higher lows on the 15-minute chart. There is a trend line can be drawn here. So if the price comes back to the trend line or reaches this previous swing high of the 15-minute chart, there might going to be a good move to the upside. For our this doji candle at this support zone, but again, price on the 4-hour chart makes, that's the low, that's the high, and made lower low. I would like to see the price break above this high and retest to enter long on the 4-hour chart. That's one of the methods to trade the market trend. But if you and often traders, they get confused. So if this is a daily support, why don't we trade when the price reverses at the support? And that's a very good question actually. Now, if your plan is to trade the higher time frame using a lower time frame entries with price action, yes, that's exactly how you trade. But if your plan is to trade the higher time frame using the lower time frame shifting momentum, then you have to wait for the price to create a new market structure on the time frame you want to take the trade. So these are two different trading strategies that they can be, of course, they can be used on any market, but you need to know in advance what you are looking for to trade, because if you don't understand what you're looking on the markets and what you want to trade, then you're gonna find you're gonna get a bit frustrated in the market. Someone asked, what do I mean to create a new market structure? Guys, market structure is every time the price makes higher highs and higher lows, price has this upward momentum, so it moves to the upside. When it makes a new low, so a lower than the previous low, and it makes a new high that's lower than the previous high, then the price shift its momentum and from uptrend transited to a downtrend. So it changed market structure. So that's what it is. From an uptrend, it turned to a downtrend. At least that's how in technical analysis we teach this this concept. Now, maybe other people, they create a new terminologies, change of character and this and that. So that's not something, I mean, everyone can say whatever they want, right? The meaning at least to be the same, and the words we use to describe something, it's another story. Let's check the, did we check the euro? No, we didn't check the euro US dollar. So still in a downtrend. I'm very happy with this one because at least now we know what we are looking for. Price made a lower than this low here, so I'm waiting for a reversal price action anywhere to look for some long to look for the retracement and initiate some short positions afterwards. So for now, this is I'm bearish on that one. Yeah, of course, on the 15-minute chart, market makes lower highs and lower lows. And here it's the example I was I was saying before, the two ways to trade with the higher time frame. We said that we want the market to either we identified, let's say that this is a strong area of resistance on the daily chart, and we come to the 15-minute chart and we trying to find the price action to trade like this one here, or we wait for the shift in momentum on the 15-minute chart, like a double top will be ideal, so we can get early in the trend, or we can wait for a new lower low if we want to sell. So we wait for this retracement to trade trend on the lower time frame. So either we always look to take trends on the time frames we are execute, or we look to trade the price action based on the higher time frame support and resistance or moving averages or any other Fibonacci retracement maybe. But traders that they get really frustrated and scared, and they see, oh my god, this move it's already on the go, and they start entering here without even putting a stop loss, or they put a stop loss there. If you enter there and you go for 5-10 pips stop loss, you put it there, and then you see the market retrace and you get panic and you move your stop loss up there, and you see the market retrace a bit more and you see, oh my god, I'm going to lose everything, and you get out of the position right here, and then the market, it moves to the downside. Now that's very common behavior by traders, and it's simply because they don't trade the plan, they just try to trade any move that is on the go, and that's really not very good. Guys, excuse me for a second, please. I'll turn off the camera for 1 sec. Alrighty. So that's how we trade this one here. Australian dollar against the Australian dollar, US dollar. Based on this uptrend, I was looking to get some long positions yesterday on the 61.8 Fibonacci ratio. Price just moved straight lower, so I didn't manage to do anything with that, which is fine. Again, it's not a problem. Today it looks like it reverses back to this swing. Now the market really shifted its momentum, and from uptrend, as you guys see here, the next, that was the recent swing low and has been broken yesterday. So we have a new market structure, so we have a new lower low. So from this point here, will be, I delete this thing there. So that was the low. Now that becomes the high. For those they sit on coaching with me, they learn how to read the markets correctly, and it's something that I'm very proud of them, because it's very important to read the market correctly. If you can't read the market correctly, then how would you be confident to take any trades, right? Anyone is anyone holding trades on this one? So I'm bearish on this based on the new market structure, but again, I won't just blindly go on the 15-minute chart and start selling this market. Preferably, I would like to see this a new low, so I can define a lower high and a lower low, and then on the next retracement to take some trades. Okay, that's how ideally I would like to trade it. Or if it's if the price will consolidate in a, let's say, triangle formation or rectangle formation, if price is going to do something like this, I will definitely play the breakout to the downside. Okay, because it's a consolidation and higher time frame. Now it's with lower highs and lower lows, so I will have taken that trade. Next one, this is, I'm still in this trade. So because of this double rejection with bearish engulfing 2 days ago, I entered short. So I'm going for 1.5 to 1. It's a low probability trade, therefore stop loss. Therefore the risk on this trade is much less than the risk we take on a high probability trade. Still bearish on this one, 15-minute time frame. Here is what I'm talking about, guys. Let's just hide them for a while. Do you see this one here? Up. We can draw. All right, I'll just show you. Come on. Okay, so look at these guys. Look at where I will point with the mouse. So this, the price made this higher high and higher low. Do you guys see that? It moves with higher highs and with higher lows. And at some point, the price failed to make a new high. And also, the price ended as a, who knows this candle pattern? It's like a doji, a shooting star, something like this. Yeah, but the point is that uh, it stopped at this area here. Um, my main concern is not the candlestick. It's just that the price didn't make a new high and it didn't close higher. So if on the daily chart I was looking to find short entries, then on the 15-minute chart, this price pattern double top, I will have placed a sell stop below the low here with stop loss above these highs there to take this trade to the downside and target this daily low there. Okay, that's how I would have taken uh, this trade. But I'm not really looking to do anything on the intraday with that. Next one, the Kiwi, still in an uptrend. Price makes higher highs and higher lows, so there is no reason to sell. I don't know some traders, what are they thinking when they trade, or how do they read the market. I'm trying to help everyone to understand that a red candle, it doesn't mean anything at resistance. Okay, it looks like the buying pressure is not there anymore, but you have to, at some point, you have to start becoming objective and understand how the market really moves. So price, it's still in an uptrend. No reason to look for any kind of sell positions, at least right now. Maybe things will change tomorrow, but we are looking at the markets today. Okay, not tomorrow. Tomorrow it will be tomorrow. Today is today. So USD Canadian dollar. And of course, this market is in a downtrend. Price makes lower highs and lower lows. That will be nice to see the price. Another green candle at this resistance. And I will have definitely look for some short positions. For now, I'm on the sidelines. I'm not looking to buy. I'm not looking to sell. Price didn't touch at any strong resistance to start selling. Again, for institutional traders, and this maybe it's going to be the beginning of a downtrend, because maybe some of them, they are creating this move, but all the retail traders like yourself, like myself, who we are speculating, we are small speculators in the market. We have to be smarter and thinking, how can I confirm that here the big sellers are joining the market without seeing any kind of reversal, without seeing any kind of shift in momentum? How can I do that? And the short answer is simply you can't. I can't. We can't. That's why we need to understand what is a high probability setup, what is a low probability setup, based on the market, not based on our thinking or based on someone on YouTube explain something. Okay, we have to read the market. That's all. USD and Swiss franc. From this, I tried to get with a potential bullish engulfing 2 days ago, but the price didn't make it all the way to the high at 0.8799695. So the order canceled. Higher highs and higher lows yesterday, as you guys see here. Again, price is in a downtrend. Maybe we're going to see kind of double bottom at this point. Who knows what's going to happen? But for now, I'm not looking to sell. I'm not looking to buy. I want to see a strong reversal price action. USD JPY. I like to sell this one, but it's in a downtrend. We identified that support is from a higher. Actually, that's the last month low. That's why I have the support. Price the last 2 days, the last 3 days actually react at this area, so we need to see a break, or we need to see a kind of yeah, actually we need to see a break below the support for the downtrend to continue, or the price to push a bit higher, just price to put a to move upwards. If the price will move upwards from this point here, it means it can make it all the way to this trend line, and if the price come at this trend line here, we will see price action reversal. We'll look to short it. Pound JPY, yesterday the price ended as an inside candle, and that's going to lead to a strong breakout today. If it's going to be to the downside or to the upside, we don't know. What we know for sure is that we are in the middle of no man's land. There is nothing that to support the price here or to create resistance. So that's all. Euro, it's one of the weakest currency pairs, it looks like. Weakest currency, not currency pair. So we still don't know where is the swing low, because we still don't see any price action reversal. Once the price action become a reversal price action, we can mark the swing low. Then we can use the Fibonacci retracement and so on and so forth. Guys, sorry I didn't look at the comments, it's been a while. Yeah, on Friday, non-farm payrolls, and that can shake a little bit the market. That means it's in the middle so far. Yes. Someone says that means the bears are not ready for a retracement. Yeah, that's correct. We cannot, Lily said, yeah, we cannot make an entry at this point. Yes, that's correct. When you see the market moving like this and you really want to take trades, you better utilize the lower time frames market structure. Like time frame, let's say here it made a higher high and a higher low, and at this point make a lower high and lower low. If you didn't identify this swing here, to put a sell stop order with a stop loss either here or there to be more conservative, so you could have entered there, and or now you can wait for a retracement. I believe this retracement, if it's going to happen, it's going to happen during the London session, and market is going to drift around until the New York session, to be honest. That's what the market usually does. Next one, New Zealand JPY. Q, it's very strong. So from this support at 3, the price it moved higher than the yesterday's candle's high. So maybe some long positions are good for this one. Australian dollar, that was a failure swing here where I point, and this new low, it changed the uptrend. So I'm on the sidelines with this one, to be honest. Swiss franc, Japanese yen, nothing. Inside candles, nothing here, no support resistance, so there is nothing to comment. As well as the Canadian dollar against the Japanese yen, there is no support, there is no resistance. Price is just in the middle of the move. Euro, Australian dollar, it's in a downtrend. We are looking to sell it, but these candles are so large, I don't want to get involved. Euro Canadian dollar, also on a downtrend. Retracement is not favorable. Guys, this, you see, we identified the market structure here, but we want to also get the entries. Now, If you're not, and again, it's based on the two plans, trading plans I explained. The one trading plan is you identify the daily direction and you find the execution point on the daily chart, and then you go to the lower time frame and you look to find price action to trade that one up. Or you, the other way, you identified the daily trend and you look on the lower time frames to find where the market will shift the momentum and to trade only the swings. Okay, these are two different ideas, two different strategies. Both of them are equally well. Now, you have to understand every time what you are trading and how to manage your risk on each position. Okay. I got a losing trade yesterday on the Kiwi, on the Euro Kiwi, but again, we make it clear that this is a um, this is a low probability trade, so the risk here was very, very small, nothing compared to a when the market is trending. Because of this reversal candle, yesterday the market made a new high. So today it take the stop loss, so this one was a losing trade for me. That's okay. It's not only winning trades, guys, in the market, we also take losses. Another trade I started from 2 days ago. It was this bearish engulfing candle here. Okay, this morning the market made a lower low at this point here. That's the Australian dollar against the Swiss franc. So I had two positions here. The one is 1-on-1 and the other is for 3-to-1. Of course, because we initiate two positions, we all know that once the first target get hit, we automatically move the stop loss for the second this trade closed for 1-to-1, and then we move the stop loss from the second position to break even. So I got out of this trade as well at a break even. So, and that was a full risk trade because of the market structure, lower highs and lower lows. So that was a good trade. Any other currency pair, guys, you want to see analysis? Good morning everyone. Some people, they join us now. We are at the prices at resistance. That's a German 40 or the DAX 40, DAX 30, German 30, however your broker named it. Price, it's at a strong resistance. If we look at the left, that's around 16,500. Yesterday I had a pending order to trade short if price will have break below this low point here, but it didn't trick me in, so these are not relevant anymore. Price, it's in an uptrend, very very steep uptrend. I can't even get trades on the daily chart. On the 4-hour chart I didn't get involved with any of this one here because it's not what I trade. But anyway, market does its thing. We have a plan, we trade our plan, and that's all what we can do. Guys, so far we cover all the majors. We cover all the Japanese yen cross pairs. We cover all the euro cross pairs. I mean the euros, euro CAD, euro New Zealand. And we cover the Aussie CHF. I think that's all from me today. I would like to wish to everyone to have a fantastic trading day ahead. Remember to manage your risk accordingly based on the market behavior. Okay, it's not based on market volatility. When I hear people saying manage your risk because there is volatility, that's totally crap. because the market volatility is one. Without market volatility, the price, it's going to just move sideways. Okay, we want the volatility, we want as much volatility as possible. What we need to learn is to identify what is a high probability trade, what is a low probability trade, to have a trading plan for each different types of trade if we would like to trade them, and to know how much we're going to risk on a high probability trade and to know how much we're going to risk on a low probability trade, and also to have a predetermined target before we enter the market. Or if we're going to trade, um, let's say, trends, we know that every single day we're going to move our stop loss below or above the previous low or high if we want to trail stop losses. There are for every, I can't just stay here for 10 hours and talk about this stuff and explain you, but if you really want to advance your trading, I will definitely encourage you to send me a direct message to explain you how I can help you with private coaching one-on-one, and what you guys need to understand at some point of your trading. um, when you want to have everything for free and you're not willing um, to invest some money in your trading, not only in your trading account, but also in your trading to learn some accurate information about trading, then you're going to always trying to find um, this and that maybe this is going to be the way to go. And with few losing trades, then you start uh, doubting your trading and wondering and all this stuff. So I invest thousands of dollars when I start trading to learn the properly how to trade. I went through um, learning curve as well. Okay, with all the emotions, frustration, and happiness, and I mean all the emotions in trading. But again, at some point, you really need to, if you want to see serious results, you need to treat it seriously. And maybe it's not myself that you feel comfortable or you feel the trust to sit on coaching. Maybe it's going to be somebody else, which is totally fine. Okay. Um, so think about this stuff. In case you need to contact me, you can find me, of course. You can send me an email. You go on my profile and you see my email down there. Just copy and paste and send me an email. Okay. So myself and the whole team around MarketMinds Mastery would like to wish you to have a fantastic uh, trading day, also day, especially if you live in a place where it's the sun is still in Europe, where the sun is still visible. So I will see you all tomorrow at the same time. Bye, everyone.